Welcome to Market Momentum Tutorials. I hope you've watched 1 and 2. Come to the website and learn more. Once you've watched all 8 or 9, you'll find new trading levels that you won't find on normal charts.
On cable, sterling, however you like to call it. This is the monthly. ABC up there, ABC down here, and this didn't quite get below there, so that was a B leg, so it was an A, B and a C. We've come down for a little A, we're having a little B here. We're hoping it's not going to go up too much higher because we're actually looking for a top in the market. And one of the things we'll talk about later is momentum range lines, and of course if you watch the other video you know where we are. If we look at the 2-month momentum range trend line, we actually closed, should open just below that come Monday morning on the 1st of November, and overall we got looking for the diff to go down. We've had an ABC there, AB, little kink, and this is a smoother ABC here, B leg, and the monthly's in fact turned down this month on that one. So again, we're looking for probably limited upside, and as a target level we could be looking for a decent move down, even if it's only going down for a B leg here, because this is part of a bigger move. But generally, if you can look at the monthlies, we don't really get much higher than these sort of levels, and the stretches on the occasional stretch you can see usually on a recovery from a big fall is when we get the above ordinary excesses here. Now just going back quickly to the S&P daily average differential, if you remember I said to you that I would show you why upside was pretty limited this month, why you should look at multiple time frames or multiple time periods, MTPs or MTFs, whichever you like to call them. We're going to look at the monthly on the S&P now. Here's the monthly range, momentum range on the S&P. I haven't put counts on it, but you can see that's an A, and that's a B, and that's a C, and that's an A, B, C. Now the question is, what we have to look at is stretches. This is why I wanted to say to you on the daily average differential why that market didn't really gain much in the last 2 weeks of October, and that's because it was a big stretch area. And if you go over, I mean this is only showing 7 years, but I mean for years this was the only time we've ever been over 100 that I can remember on the S&P in many years. And it's usually when you get a recovery from a crash. And we've been up here, sitting up here for the rest of the month, 2 weeks of October, and hence the ROC change on the daily average diff and a much narrowing of the momentum as the market stayed here trying to go higher, and it just couldn't. And if you look back in history on here, every time we've been up near stretch levels, it's been 2 months at a time. Here again, no more than 2 months. Again, and we're back 2 months here again. Now the thing is that we opened November back down here. You can see where the dash is, and if you watch the introductory tutorial, then you know where that's the market's going to open 1st of November at an unchanged level, and it's no longer stretched. However, one thing we do know is that normally we only have 2 months of stretches at a time. I mean, you can see this one still stayed up pretty high, which means the market can go a bit higher. Our original target was 11.55-75 area on the S&P for a top, and it's been sitting there. It's actually poked through it to 11.96. But it hasn't been able to go higher throughout those 2 weeks in the month, which is what generated the complex momentum range charts and the daily average differential. Now this market closed at unchanged. It closed around 11.83 at the end of the month. Our low value is 11.82.56. So it only takes a couple of ticks, a couple of points to the downside to break this monthly low value, even though it has room to the upside. And what this tells us is this will turn down the monthly diff. As you can see, the monthly diff is pointing down 2 months in a row, and a break between below 1182.9 or whatever that low value was will confirm next month's turn down already. But there is room underneath that momentum line for the market to go higher as this turns down. That's the monthly picture. You know that even if we do go higher, we have limited upside potential. And you know, we've had an A leg. Is this a big A leg? Is this a big B leg? Generally tends to be because of the stretch levels. And this should potentially go down for a C leg and give us some form of target area on the monthly ranges when it does confirm that. So that's why you need to look at multiple time periods to gauge where you are in the overall picture of the market, and then trade accordingly to your time period. And just lastly, to give you a bit of an idea, here this is actually for trading tutorial, but this is an ABCs. You can see the ABCs. I've labeled that as a little ABC because it's one movement. But you can trade this in various ways. You can trade the 1, 2, 3 movement and just trade the crossovers for longer term periods, as you can see. Or you can go slightly shorter. For example, this one is similar to that in that this is the ABC movements. It's another example of longer term trading. You can see buy, sell, as these are all broken, and they give you quite decent entry points into the market. And then you go here, and even on a shorter time period, you can trade more in out, as you trade smaller movements and bigger movements. But we'll go that into the trading. But this gives you a general idea how you can trade a full movement, an ABC movement. These shows classic ABCs. But obviously it's more complex stuff. We can trade in shorter time periods than this, longer time periods, and we'll go into that at a later stage.